Hello everyone, welcome to BISP Solution. So this will be our third session on intercompany. So we were looking into the configurations that are required for the intercompany, and we have completed few configurations were still left. So let's move to the presentation and check out our today's agenda. So we'll see the remaining configurations, which are intercompany receivables assignments, intercompany balancing rules. Then we will see how these balancing rules are defined, means at what level can we define the balancing rules. And then if we have the requirement of additionally creating some intercompany balancing and clearing option, we can also go for that for our primary ledger, secondary ledger. Means if we are having say three balancing segment for our system and we have defined one for the balancing rule, then other two we can include in this additional intercompany balancing and clearing option. After that, we'll create a simple transaction in the GL, the journal, GL journals, where we will see how the balancing rule do the balancing of the transaction that we will create, and then we'll directly post it in the general ledger. So this will be from our general accountant role and not the intercompany. So if someone is having just the general accountant role and he wants to create some adjustment entry, that can be taken place through this entry. Okay, so let's move to our first slide, which is intercompany receivables assignment. Through intercompany receivable assignments, we can map our intercompany transaction type and a receivable business unit to the receivables transaction type and receivables memo lines. Oracle Fusion Receivables will use the receivable transaction type and the receivable memo line to process the intercompany transaction transfer to the receivable application. You can configure specific receivable transaction type, specific memo line, and then you can use for each intercompany transaction type for a receivable business unit. So this setup will help you map your intercompany transaction type with your receivable transaction type and memo line. So there can be specific or the one which are already present in the instance. So let's go to the instance. So this is my instance. I'm on the home page. From the setting and actions tab, I'll go to setup and maintenance. Then through the setups, I'll select financials. From the financials, I will go to the functional area intercompany. When we select this intercompany, the required tasks are available. Means for the intercompany, the minimum setup required is just your intercompany organization, its data access and the balancing rule, and just your ledger must be enabled for intercompany. That will work. But for additional setups, you'll click on all stars. So you will there will be a list of all the tasks which we can perform as per our requirement. So this is the one we are talking about, manage intercompany receivable option, assignment. So you can see in the manage intercompany receivable assignment, this is the one which I have created for our US1 business unit. So say if I want to create, means if someone is entering the transaction for US1 business unit and the transaction type is IC addition, So if we have created a transaction with US1 business unit and your transaction type is IC addition, then when the receivable invoice will be generated, transaction will be created, then the corresponding or the mapped transaction type is the system will pick will be intercompany, and the receivable memo line will be global intercompany. You can define a specific transaction type and a specific memo line for your transaction type in the intercompany, and you can map it through this functionality. So here I'll again take US1 business unit. I will take some other transaction type. Say I'll take IC sales. Okay, then I'll provide the receivable transaction type to what I want to map to. So these transaction type are already defined in our receivables setups. So say I'm selecting intercompany again here, and the memo line is optional. If you want to provide, you can provide. If it is not required, you can just skip this. So I'll again take this advanced global IT system, intercompany system, and I'll click on save and close. So whenever I'll create a intercompany transaction with IC sales, so my receivables workbench will select the transaction type as intercompany and the memo line as global intercompany for this IC sales. Okay, then moving to the next part. So intercompany balancing rule, this plays a major role in the intercompany while creating your accounting. So these rules are used to generate the accounts required to balance journals that are out of balance by legal entity or primary balancing segment values. We specify the intercompany receivables and intercompany payables account that we want to use as the template for building the intercompany receivables and intercompany payables account. The intercompany balancing feature will use these rules to generate the accounts of the balancing line that it will create. So what will happen? General lines will are first summarized by the legal entity and are balanced by the legal entity. Since a legal entity can have many primary balancing segment value, it's possible that a general could have multiple lines for a legal entity with different primary balancing segment value. In that case, when intercompany balancing is done, the lowest primary balancing segment value within each legal entity in the journal is used. After this, balancing occurs across the balancing segment value within each legal entity. These same rules are also used to generate the intercompany receivables account and intercompany payables account of the transactions entered in the intercompany module. The intercompany balancing rules are also used to generate the intercompany receivables account for the provider side of an intercompany transaction. And balancing rule are also used to generate the intercompany payables account for the receiver side of an intercompany transaction. After you create an intercompany balancing rule, you cannot modify them, but you can end date them and then create a new one. So carefully create your balancing rule, as they cannot be deleted, they can just be end dated, and again you can create a new rule. Now, while defining the balancing rules, there can be 4 different levels: the primary balancing segment, legal entity, ledger, chart of account. So the rules are evaluated in this order only. So for example, you can define a primary balancing segment rule and a legal entity level rule. If both rules can be used to balance a particular journal, the primary balancing segment rule is used as it has a higher precedence. You have a flexibility in defining your intercompany balancing rule. You can have a simple setup in which you define one rule for your chart of accounts. This rule is used for all intercompany balancing for all ledger that use this chart of account. Alternatively, you can have a more granular set of rules. For example, define a different rule for each legal entity and one chart of account rule to cover any gaps. You can gain even more granularity by defining a rule for a specific journal and category combinations and the intercompany transaction types. How do we use the chart of account rule for intercompany? That also we'll discuss, and then we'll see how the balancing rules are defined in the system. So using chart of account rule for intercompany balancing, you have flexibility in defining your intercompany balancing rule with the setup of a single chart of account rule to use for all ledgers that are using this same chart of account. When you create a chart of account rule, you specify the chart of accounts, intercompany receivables and intercompany payables account you want to use, as well as the source and category. It is recommended that the intercompany receivable account be an asset type account and the intercompany payable account be a liability type account. You can define rules that are applied to a specific source and category such as payables and invoices, or a specific intercompany transaction type such as intercompany sales. Alternatively, you can choose to create rules for all sources and category by selecting the source of other and the category of other. Intercompany balancing will then evaluate the general source and general category combination in determining which rule is to be used for balancing. Let's move to the instance and then we'll see the balancing rule that are created here. Okay, this is the task, manage intercompany balancing rules. So these are the rule defined. Here we are on the legal entity rule. You can see at the level of primary segment we can define the rule. Then we can so when our system will be doing the balancing, it will check the primary segment rule first. If there are no rules defined here, it will go to the legal entity rules, and for that legal entity, if there are no rules defined, then it will go to the ledger rules. And even if no ledger rules are defined, the system will go to the chart of accounts rules. And if no rules are defined for your chart of account that you are using, then your system will throw an error, as there will be no balancing rules available for the system to balance the intercompany journals. So if I talk about legal entity rules first, let's see for the how they are created. So from ledger to ledger means if you are doing a transaction from a different ledger to a different legal entities which are assigned to different ledgers, as we were discussing in the scenarios yesterday, there are two primary ledger and both the legal entity are using different ledgers. Then how the things will be mapped? So the legal entity rule shall apply, and here you need to mention your from ledger means the provider ledger from which the entry is going. So you can see here you can provide the source and the category. So source can be your intercompany sources. So global global intercompany can be the source. Okay. Then you can have the category mentioned. For the ease of doing things, we can take other as a source and other as the category. But if you want to have this specific category, specific source, you can mention it here. So internal transfer can be one of the category. Then you can provide the transaction type for which you are creating your balancing rule. So these are the transaction type for intercompany that we have already discussed. So see, I have taken a IC sales, say IC sales. So if when I am selecting IC sales, source and category are none. Okay, because it is now based on your transaction type. And then you can provide your legal entity, and then the ledger will by default be coming. So say I am defining for India legal entity 2. So Indian primary ledger is selected here. To say US legal entity, US 1. Actually this is a practice instance, and too many rules are already defined. So I'll try to create one if this system takes it. Okay. So to ledger it is taking as, I'll select US primary as US primary is the primary ledger for US 1, and we can specify the receivables and payables account here. So based on these balancing rule, our system will perform the intercompany transactions. Okay, so here there is account for intercompany receivables. We need to define only one combination, and the system will accordingly create the combination based on the values that we are using. This is the advantage of having our intercompany as a segment in our chart of account. Payables account, I'll take out this one and I'll click on OK. Now I'll click on save and close. So if this will not be created, system will take it. Yeah, so the rule has been saved. So this way we can define. So in our case today, we will be using US1 and US2. So US1 and US2 legal entities are belonging to the same primary ledger. However, the rule is also defined. If you see this rule, US primary ledger to US from ledger US primary to ledger is US primary, and from legal entity US2 to legal entity US1. So this one is end dated, and hence you can see, and another rule is already created for this. So this is the way we can define it at the legal entity level. At the ledger level also you can define the rules. So this is here defined for the same ledger, US IFRS secondary ledger, and they have mentioned the receivables and payable account and source and categories as other, and transaction type as none. The most used is the chart of account rules. When we are sharing the same chart of account, we can create this rule. So in this case also, if I see the US chart of account which is being used for this US primary ledger, so these are the rules defined. Once you have defined the rule, you cannot delete it. You will have to end it and create another rule. So the simple way of creating the rule is click on add, and then you mention your source and category, and if it is required you can mention the transaction type, and as this is based on chart of account, you will have to mention the chart of account. Okay, and then your receivables and payables account. As we have done for legal entity, same way we can create the balancing rule for chart of accounts. So intercompany balancing will then evaluate our general source and category that we have mentioned here, and used on these, based on these category, it will determine which rule should be used. So what will be the precedence? If we have some specific general source and specific general category, then the system will pick that first. If I have specific general source and general category of other, it will be on the second precedence. If the general source is other and the general category is specific, then third precedence will be given to that, and then general source other and general category other will be given the precedence. So this is how the intercompany balancing rule works, and this is the most important setup which is required. If I go to the required task, this is one of the mandatory setups. Okay. And in our first lecture, we have already discussed that our primary ledger or ledger for which we are doing the intercompany should have the intercompany enabled, or else it will also give an error. Then comes the other type of setup, which is additional intercompany balancing and clearing option. So additionally, we can specify these options. These are used to balance the secondary balancing segment or the third balancing segment, or both, when a transaction is unbalanced by one of these segments but is already balanced by the primary balancing segment. So as you all know, our chart of account can have three balancing segments: the primary, the secondary, and the third. So if I have defined rules for primary balancing segment and still it is not balanced for second and third balancing segment, then we can define additional intercompany balancing options and clearing options. So this option is defined for a ledger, but you can create rules for various source and category combination. Additional intercompany balancing and clearing option include the following settings. The first one is intercompany receivables and intercompany payables account. So you can use as the accounts, these account as the template to build the balancing account for your balancing segment 2 and balancing segment 3 when the journal is already balanced by primary segment 1. Okay, so the same way we have defined the balancing rule, we have to provide here the receivable and payable intercompany accounts. And then there is a summarization option where you can choose the summarized line within a legal entity before balancing lines are generated by choosing the summarize net option. Alternatively, you can choose the detail option so lines aren't summarized before balancing within a legal entity. Summarization always applies to the balancing line generated in a cross legal entities scenario. Then comes the clear company option. You can choose to set clear company option to balance a many-to-many general. Set these options to manage your clearing company balancing. Oracle recommends to always set clearing company options to handle many-to-many journals. This avoid balancing failing during general ledger posting or subledger accounting process. So there are three parameters which you need to check. Clear company condition. Choose when to use a clearing company. Clear company condition. Choose when to use a clearing company. Use clearing company only for intra-company journals. Use clearing company for all many-to-many journals. Error out if many-to-many journal. The default value for this option. So we'll go in the instance and then I'll tell you about these, so that will make more sense. So I'll select all task here. Manage additional intercompany balancing and clearing option. Again, you can see there are many options defined already. I'll choose one of the ledger. US primary ledger. Oh, okay. So for this, one of the rule is created. However, we cannot edit it. Means we cannot delete it. So this is the one, US primary ledger, general source other, general category other. Let's create for a specific general source so that I'll show you the options. So ledger I am taking as US primary ledger. Then a specific source we can take. Specific category we can take. The intercompany revenue. Then we can provide the receivable and payables account. After we have provided the accounts, this is the start date we need to mention from where this is active. Now this is summarization and clearing company option which I was discussing. So summarization has two options, detail and net. So detail and summary net. So you can choose to summarize lines within a legal entity before balancing lines are generated by choosing summary net option. Alternatively, we can choose detail options. So lines aren't summarized before balancing within a legal entity. Then comes the option of conditions. So there are three options. Use clearing company only for intra-company journals. Use clearing company for all many-to-many journals, and error out if many-to-many journal. Okay, then you can have sources. So if you choose many-to-many journal, the source will appear here. It has the option as default clearing balancing segment value and manually entered clearing balancing segment value. So this way we can choose how to clear how the clearing company value is derived from the balancing line. So there are options as default clearing balancing segment value, and the other one is manually entered clearing balance value. If you select manually entered clearing balancing segment value, then you must manually enter a value in the create journal screen. This option does not work for subledger accounting entries as they don't have a field on the user interface to enter this value. Then if you choose this option as default clearing balancing segment value, then you need to specify the clearing company value. If you select default clearing balancing segment value for the source, you must select the primary balancing segment value in this field. This value is used to balance your intra-company or many-to-many journal. So hope you have understood this and the options available. So if I select here option in the receivables account, so this is 101, the primary segment value, and other details are provided. So I'll select any account, say this account. Okay, and here I can select the payables account. As soon as you select the accounts payables accounts, click on OK. Now you will see here in the value, you are having the primary balancing segment values for your based on your chart of account which is there. So you can select 101 or any value you want to have in the default clearing option. So okay, so this is how we can define the additional intercompany balancing and clearing option if we require it. Okay, moving to the presentation again. Now this was all relating to the setups which we need to do, but but when we create the journals in the general accounting dashboard, we can create a journal with the general accounting role and the data access, and then we will provide the segment values from the legal entities which are transaction which the transaction is taking place between. Okay, and then we can post the badge or the journal, and then we can see how these balancing rules are working in the system. This is different from the create transaction that I have shown in the previous session. So means I will not be using the create transaction task in the intercompany that we will be talking about in our upcoming session. Means from here, how can we create the transaction for having the AP and AR invoices? We can create transaction here and generate inbound and outbound transaction. So we can use this functionality. However, this we will be talking about in the upcoming session. I will be simply preparing a adjustment journal in our general accounting. So I will be using general accounting journals dashboard. Here I'll go to manage journals. I have selected my data access set as US primary ledger, and I'll go to create journal. I'll create a journal one journal here. So journal batch. I'll show you the basic functionality of the intercompany rules. So that's why I'm creating a journal here. Okay, so accounting period is 523. Manual is the I'm just entering the minimum details. Okay, ledger is primary ledger. Category I'll select it anything like adjustment, or okay, I'll select as adjustment. So other category, other source is there defined, so that will be applied here. I can provide any account here. So say I'll pick one of the account. Miscellaneous expenses I'll pick. Okay, you can see I have entered 101 as my balancing segment value, and now when I am entering the line 2, I will use balancing segment as 102, which is US 2, legal entity 2, business unit 2. Sorry, US 2, US 1, legal entity 2, and our 101 is US 1, legal entity 1, business unit 1. Okay, so this means they are this is a transaction between two different legal entity values. Okay, account I will take as recruiting expenses. So sorry, Okay, so this way I am debiting the 102 balancing segment value from 550, and I am crediting a 101 balancing segment as 550. So my balancing segment are different, so this entry should not balance. So when I will post this into my general ledger, so you can see the process is submitted. Okay. However, as we know, the general entry should be balanced for the balancing segment that we have entered, but here there are two different balancing segments. Now when I go to my manage journal page, here if I select manage journals and I'll search for my batch, so you can see it is posted and the journal batch is created for our reporting currency ledger also. I'll open this. The journal is created. Now if you will see the journal lines, here there are 4 lines, but we had entered just the 2 lines. So you can see the intercompany balancing has been done here. What the system has done, it has balanced 101 with first and third line. We need to check. So first line is balanced with the third line, and it has now the balancing intercompany segment as 102. Same way, the line number 2 is balanced by line number 104, fourth line 102, and here the intercompany segment has the value as 101, and the accounts that are being picked are 18100, which is our IC receivables account, and the another account is IC payable account, because the payable is generated for 102 account. We need to 101 needs to recover 550 from 102. So this way the adjustment is entry has been created, and if you need to check this in the reporting currency, you can see in the reporting currency the transaction has been converted in the euro, and here also the entry has been posted by creating the intercompany balancing line. So this is how our ledger needs to be enabled for the intercompany, and our balancing rules come into play, and they do the intercompany accounting. And this is done in the journal ledger directly. This is not coming from the intercompany as a transaction. But if it would have been from this transaction, the intercompany transactions, then the receivables and payables accounts for manual intercompany transaction generally are generated automatically by the Oracle Fusion Intercompany. Each distributions for the transaction and intercompany generates the receivables and payables account based on the balancing rules that are set up. The intercompany uses our transaction type, provider legal entity, receiver legal entity, primary balancing segment value for the first provider distribution, and the primary balancing segment value for the first receivable distribution to ascertain the rule to apply. Intercompany then uses the rule and the balancing segment value of the first provider distribution to build the intercompany receivable account combination for the provider side of the transaction. Similarly, intercompany builds the intercompany payable account for the receiver side of the transaction based on the first receiver distribution account. So what happens is, here this option is used, create intercompany batches, and here we provide the provider provider intercompany organization name, and here we'll provide the receiver and the distributions for provider and receiver and the debit and credit amounts. Then this will generate an inbound and outbound transaction, and for inbound the receiver needs to give the approval wherever it is required. And then the general entries are created based on the intercompany balancing rules. So the intercompany will evaluate the rules in the following order. It will see the primary balancing segment rule is defined, or the legal entity level rules are defined, or the rules are defined at the ledger level, or the chart of account rules. If there is no matching rules at the lower level, the intercompany will use the chart of accounts rule. It is therefore recommended that you set up a chart of account rule for every chart of account structure you have. This will ensure that the intercompany will find a rule to use to generate the intercompany receivables and intercompany payable account for transaction. Intercompany will then evaluate the transaction type and determining which rule to use to generate the receivables or payables account. A rule with a specific transaction type will take the precedence over the rule defined for all other transaction type. So this is an overview how the create transaction functionality or the intercompany functionality works. In the upcoming session, we will be seeing how we'll be creating the intercompany batch from here, and then how the approval flow will work, how the approval can be set up, and then all the functionality which is mentioned here, means how we'll transfer them to GL and receivables and payables, and how the invoices are generated in the receivables and the payables applications. So hope you have understood today's session, and thank you all for joining and watching. Thanks.